Hello, I'm Michael Glass from WeWorkWithMike.com, and this is our weekend wrap up for April 30th. Before we begin our video, we want to go over our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stocks, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategies we use today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So again, this is our stock market wrap up for April 30th. We're going to look at the economic calendar for the past week and the week coming forward. We're going to look at some of the price action from the prior session. We're going to identify some key support and resistance price levels, look at gold and the crude oil charts, and we have an education spotlight at the end. So the week that was, we saw the Dow Jones, the NASDAQ, and the S&P 500 all rise, with the NASDAQ and the S&P up about 8% and the Dow Jones up 10%. Not much going on this week. Gold hit a new record high. Crude oil continues to make multi-year highs, not up to that 150 that it was back in 2007-ish. We didn't have any overseas news this week. Earnings are continuing to be good. They're over 75%, I believe, of the 300 out of the 500 S&P 500 companies are reported. 75% of that 300 have beat their expectations. You can see Amazon beat, ExxonMobil beat. RIM, on the other hand, did not. They haven't released yet, but they lowered their forecast, and so they took a little beating on that. The most important thing this week was that our GDP was a little bit better than expected. They were expecting 1.7 and it came in at 1.8, a little bit better. And FOMC decided to leave rates unchanged, and they kept the phrase in for an extended period of time. So the market certainly has rallied off of that. Going into this upcoming week, we can see that we have MasterCard, which you can see our earnings are starting to thin out a little bit. But most importantly, this week we have ADP on Wednesday, and we have our non-farms report and our unemployment jobs report on Friday. So those will probably be the two biggest catalysts of this week. Let's go to the charts and take a look. So we are beginning with the S&P 500. And what we can see on the daily chart that our MACD is still got a little room to go, heading up. RSI is getting towards the overbought level, and so is our stochastic. So stochastic and RSI are overbought, and we can see that. Let's zoom in a little bit. And we can see our support that we put in here at the 1300 price level. Of course, this dip down here is the earthquake in Japan. It makes a little sense that we went down there. And then this last swing high, about 1340, we kind of based there a little bit, almost setting up a double top. Found support at 1300, and now we've broken through. But that also ties in with why we may be, getting a little tired here, because again, our RSI and our stochastics are overbought. Now, when we zoom out and go to the weekly, we can see this next line right here, and this is all the way back in 2008, May of 2008. Is kind of the last time we've been in this zone. So that's a potential target. But let me pull back even more to the monthly, and you see these wicks right here? When we draw in a price at these price levels, you can see it takes us right to where we are right now. Takes us exactly to where we are right now. Let me grab my pointer, zoom in just a little bit, and there now you can see it. So the monthly charts are at a key resistance level. What's important, though, is that this is where buyers came in and said, so maybe some buyers will come back in, but what was once support is resistance, so we have to break through that. If we can break through here, then we may go ahead and test the swing high from that May 2008 price level. Our monthly, look at that. Even our monthly charts, scroll on back. Even our monthly charts are basically overbought, so we have to be cognizant of that. And again, well, let's go ahead and take a look at our leaders and see if our leaders are just as strong. and make sure that this move, as we try to break into the next channel and get above 1400, let's see if our leaders are strong too. So let's go take a look at Apple and Amazon and Netflix, and let's see what they're doing. So we're going to start off with Apple, and the first thing we can see in Apple, which sure had a good Friday, very nice Friday, got our signal to go long. But what we can see is that it's not as strong as the market. The market was, broke out from its highs. It's in that new area since 2008. Whereas Apple has been basically, you can still see even with Friday's action, we still kind of have a downtrend line that we can draw in here. So, watch for a break above 355 to go long. Otherwise, maybe Apple is trying to fill this gap. Amazon. Now, we talked about Amazon in our opening about the status of the market, and so you can see the earnings. So Amazon was the same way. It was making some higher lows in here, lower highs in here, and then once we broke that with the earnings. So Amazon's a little bit out of sync because of its recent earnings. What about Google? Google certainly is not making new highs, and we can draw this one down also. So Google certainly is not leading the market. Goldman Sachs, another one, not leading the market. It's lower. So what I want you to see here is the market leaders are all weak. Now Netflix possibly, send you down. Netflix is possibly finding support here in the 50 moving hours, but is that leading the market higher? I don't really see it. So our market leaders are weak, yet the market's making new highs, and the market has overbought in the RSI and stochastic levels. So we have to watch that and be careful about just blindly going long. Now, what about the dollar? Well, as the market's making new highs, the inverse relationship, the dollar's making new lows. Certainly some weakness there. Maybe the double wicks here could be a double bottom for a move higher. Gold. Market is weak. The dollar is weak and gold makes new highs. There's our new high above 1,500. Well, we've been above 1,500. Certainly to wait for a pullback on that. And our crude, potentially putting in a little maybe a little resistance in there. Got the wrong tool. Let me go here. Potentially putting in some resistance here. Zooming in a little bit for you. Potentially. Certainly if it breaks higher, it will be interesting. But the main thing that I want you to see is that the market leaders are not leading this push higher, and so we have to watch that if they really start falling back, then the market's going to fall back with them. Remember, again, this week the catalyst is going to be the jobs numbers on Wednesday. And so in this week's Education Spotlight, we want to talk about developing the trader's mindset and what determines your state of mind. Well, the answer to that question is the question that you ask yourself. And so what are you doing? What question are you asking yourself that are going to help you perceive, decide, and act better to the price action that you're seeing? Are you asking yourself, are you bullish? Are you bearish? Are you asking yourself, what happens when the market goes here? As far as your stop, as far as your trade management. These are things that if you're talking about them and you're asking yourself periodically throughout the day, allows you to make better decisions because it's not cold. It's something that you've been thinking about and preparing yourself throughout the whole day. As you guys know, we're on Facebook, YouTube, and Twitter. We're Move Up with Mike on YouTube and Twitter. And we have a page on Facebook, Are You Financially Literate?, where we really talk about all of the areas of financial literacy. We've got a great free 5-part video course for you, all about how to develop a high probability trading setup. And then we have a trader's mindset video package where you can get 4 PDF special reports and also a free copy of the book Mental Fitness for Traders. It's a great book, again, developing the trader's mindset. Our mentorship, our coaching, live one-on-one sessions. They have a personalized training plan. We still have our coaching sessions available. Great if you're trading futures. Global Futures has a great program for you. If you sign up through us, you get 20 free trades. And we have a great charting package that works both on PC and Mac. And if you're a Mac guy like me, that's important. But it's you can access through a browser or any PC, and it's got great indicators that you can customize. In the end, it doesn't make a difference about your trading system or fancy dancy indicator. And we've seen a trading where some people are making money and some people aren't off the same calls. And it has a lot to do with your trader's mindset, which is our spotlight today. You have to take the time to develop yourself internally so that you can act upon the external factors like indicators and price action. Thanks, guys, and I'll see you next time.